Good morning, everybody. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Reports, we would like to welcome you to a new week and thank you for joining us on our breakfast meeting this morning. It is Monday, the 19th of July, 2021. Please note, as always, this meeting is being recorded and is also being streamed live on our Vetiva online page on Facebook. The meeting is set to last for 30 minutes inclusive of Q&A. However, the Q&A session will come after all speakers are done. On our agenda today, we will get the latest review of the inflation numbers from our economist in the among. After this, we will move to a rundown of last week Friday's capital market activities from our traders for the fixed income and equity space. Following that, we will move to our partners IC Security for their own updates from Ghana, after which we will conclude with Frontier Africa reports and their own updates. So without further ado, we will now start with Ibukun and the country's latest inflation numbers. Good morning, Ibukun.
Good morning, Dozier, and good morning to everyone. So on Friday, the National Bureau of Statistics released the figures for June inflation, and we saw that all indexes actually recorded slower price increases, with headline inflation falling to 70.75%. We believe that the moderation in headline inflation is due to the continued pass-through of high base effect, which has led to a reduction in the pace of food price increases. So on the food index, we also saw that it's moderated to 21.8%. And this actually reflects the intervention of the government in the several food blockades and on other supply shocks, as well as the reopening of the economy. You would recall that in December, the borders were reopened. So as a result of this reopening, we are seeing a lot more commodities coming to the economy, and that's why we are having a slower pace of food price increases. Also, we can also attribute this to flat PMS prices, considering the fact that the federal government has maintained a neutral stance on first subsidies. So because we have a flat PMS price, that's actually affecting the moderation in food inflation. This is also responsible for the reduction in core inflation for the very first time. It slipped to 13.09%. And we believe that given the fact that we have the same PMS price since the beginning of the year, that is actually causing a moderation in core inflation. So going forward into June, just like we had noted in our report in previous months, the base effect could continually influence reduction across all segments. But however, we notice that there is going to be a medium-term risk from the assent to the petroleum industry bill, because if that bill is assented to, that might mean a total removal of fuel subsidy in line with the reforms in the downstream sector. However, considering the fact that there will be social resistance to such a move, we expect that PMS prices may remain flat for the rest of the year. So that sums it up for inflation. Thank you.
Thank you, Ibukun. We will now move to Simbat, who will talk about the equity space. Good morning, Simbat.
Good morning, everyone. I'll be starting off on the BRVM markets. The market ended the week on a negative note after seeing gains in the last two trading sessions. Composite index closed marginally down by 39 basis points with a year-to-date gain of 11.11%. However, the market saw improvements in both volume traded and turnover, as we saw investors selling down on some stocks that have seen appreciation over the course of the week and some extending their gaining streak. An example of that will be SEFCA, which saw a 7.2% price appreciation and its 10th trading session of consecutive gains. Speaking to weekly performance of the sectorial indices, the BRVM Agricultural Index saw the most significant return with a week-on-week return of 6.27%. Our expectation for the week, we expect the markets to see mixed activity levels with some days of positive return and investors also selling off to take profits. Lastly, in Nigeria, the all share index closed Friday's trading session in the green, gaining 21 basis points to moderate the week-on-week loss to 12 basis points. Activity level improved significantly as we saw volume traded increase by 66% and turnover improved as well by over 200% to 3 billion naira. This sharp increase was due to large cross trade we saw in GT holding in the early hours of the trading session. 72.6 million units was crossed, accounting for about 70% of total turnover. And from fillers in the market, they were done by local investors and not foreign investors. We also saw increased activity level in United Capital. Remember, they released their half-year results last week, and investors reacted positively to their Q2 results as the stock saw a price appreciation of 3.17%, closing the week at 6 naira 50 kobo. Our expectation for today and going into the week, we expect market activity level and direction to be largely influenced by corporate earnings. Just like I mentioned earlier in United Capital, investors will also continue to take position in stocks that are fundamentally sound ahead of the Q2 earnings release. Also speaking of the Q2 earnings release, Unilever released theirs, and we saw an impressive performance as both the Q2 and half-year results saw a major turnaround, recovering from loss-making to 238% profit growth in H1 and 26% bottom line improvement in Q2. We'll be looking at how the market reacts to this as well. That'll be all from me. Thank you very much.
Thank you very much, Symbia. We will now move to Omorige for fixed income and currencies. Good morning, Omorige.
Good morning, everybody. System liquidity declined significantly on Friday to open at about 60 billion positive from the 824 billion positive that we saw on Thursday. Despite the mammoth decline in system liquidity on Friday, interbank rate losing by over 250 basis points in the absence of any significant funded pressure in the market on Friday, as OBB and overnight rates closed at 4.5 and 4.75% respectively. We expect interbank market rate to trade at similar levels today, barring any significant change to system liquidity. The parallel market lost 1 naira on Friday to trade at 506 naira to $1, while the earning window opened at 411.2 naira to $1. The highest trade that was recorded on Friday was 412.76 naira to $1, while the closing rate was 410.38 naira to $1, which is a 82 kobo appreciation from where it closed on Thursday. The crude oil market extended its bearish run this morning as Brent and the WTI lost about 1.4% and 1.35% to open today at 72.59 and $70.87 per barrel, following the news that OPEC and allies have agreed on Sunday to increase oil supply from August. The TV's market closed last week on a relatively active note with bullish sentiment as market participants continue to cover their lost bid from the last PMA. The most sought after maturity on Friday was the newly issued one-year paper, that's the July 14, 2022. Offers on that maturity were around 8.0% levels, about 67% decline from where it closed at the last auction. We also saw slight interest on the CBN Special NTB, that's August 30, 2021. Overall, average benchmark rate declined by about 38 basis points to close at 6.42%. The OMO segment closed last week on a muted note with few trades consummated on the short and long dated maturities. especially on the 24th August 2021, 19th April 2022, and the 5th July 2022 maturities. Overall average benchmark rate declined by about 22 basis points to close at 8.95%. The bonds market closed last week on a quiet note with slight bearish sentiment seen across the curve. We observed bids level inched up by about 10 basis points compared to the levels that we were seeing in the previous trading session. This was basically because a lot of players just decided to stay on the sidelines ahead of the monthly bond auction that is happening on Wednesday this week. Most of the trades that were consummated on Friday were majorly on the mid to long end of the benchmark curve, particularly on the 2035, 2045, and the 2050 maturities. Overall average benchmark rate rose by about 4 basis points to close at 12.7%. In the Eurobond space, it was a relatively active market as buy-side interest were seen on the mid to long end dated sovereign maturities. That's the Nigeria 2031, 2032, 2038, 2047, and the 2049. Rate declined by an average of 2.5 basis points across those traded maturities. In the corporate space, it was a tale of two halves as sell-side interest were seen on the Access-backed 2021 Eurobond, while buy-side interest were seen on the First Bank 2025 Eurobond. For our expectations today, we expect the bonds market to continue to trade on a quiet note as market participants focus on the monthly bond auction that is scheduled for Wednesday this week, while we expect the TV's market to trade actively as players continue to try to fill their lost bid from the primary market auction. That'll be all for fixed income. Thank you very much.
Thank you very much, Morgan. We will now move to our partners at IC Securities for their update, and we will start off with that. Good morning, Daniel.
Hi, good morning, and good morning to everyone. I'll start off with the Treasury bill space. Government of Ghana fell short of its target at the regular primary auction last Friday. It raised 896.67 million Ghana cedis, which was approximately 70% of the target amount for 91 and 182-day bills. Yields for both 91-day and 182-day bills remained stable from the preceding T-bill auction at 12.56% and 13.36% respectively. We reckon that the low investor participation was as a result of tight liquidity on the bond secondary market. On the local currency bond market, secondary market was less active throughout last week on the back of tight liquidity as well on the market. Few buying interests were seen around the front end of the curve, with 2022 and 2023 maturities trading in the 17% and 17.35% range. The remaining part of the curve saw selling interest with no bids to match. On the other hand, Government of Ghana raised 821 million Ghana cedis at a 10-year treasury issuance on Thursday, which was about 46% of the target amount. The final price guidance was 19.75%. The initial price guidance was 19.4% area, which means that at the end of the day, they raised the rates by 35 basis points. We tip to see less active sessions this week because market has still not recovered from the tight liquidity. And finally, on the Eurobond space, the Ghana bonds saw increased trading volumes last week, which the belly of the curve was mostly active, with 2029 maturities trading 100 basis points above the preceding week's levels on average. We expect to see similar levels this week, especially on the belly of the curve, as investors tilt their direction towards sub-Saharan African bonds. Thank you.
Thank you, Daniel. We will now move to Johnson with the equity space for that. Good morning, Johnson.
Hi, good morning, and good morning to you all. In equities, trading activity on the Ghana Stock Exchange was mainly subdued for the week ended 16th July 2021 as market participants continue to await their half-year 2021 reports. Unilever was the sole loser for the week as selling pressures occasioned further price declines in the stock by 81 pesos to 2 cedis 19 pesos. On the contrary, BOP, which is benzo oil palm plantation, and FML were the gainers for the week, advanced to 2 cedis 40 pesos and a peso at 1 cedi 35 pesos respectively. The net effects of the price movement pushed down the level of the Ghana Stock Exchange Composite Index by 4 points on a year-to-date basis. Market turnover was 2.91 million, buoyed by trades in MTN Ghana, which contributed 66.2% of total traded value. Investors are expected to remain largely on the fence as this week as they await the half-year 2021 reports. We also expect markets to maintain a similar trading pattern as it did last week. Thank you.
Thank you, Johnson. We will now conclude with Temple Asaju from Frontier Africa Reports. Good morning, Temple.
Good morning. And quickly, we'll take off from South Africa, where we know that there's been some serious unrest in recent times. 41 stores belonging to Massmart have been looted, 4 of them seriously burnt beyond recognition. They have many Black-owned small, medium enterprises expected to be badly hit, and it will be difficult for them to also recover from this unrest. That's the predictions that we're getting from analysts and of course public affairs analysts generally. On the basis of that, JP Morgan then released the reports recently, just as others have been releasing reports on the same incidents in that country. JP Morgan did says that this ongoing crisis will push the country into further squeeze, especially in the third quarter of the year. Last week, we heard from Deutsche Bank. Deutsche Bank did estimate some 0.8% economic growth to be shaved off South Africa due to this unrest as well. Of course, I think it was last week or the previous week as well that we heard from Moody's, making a comment on the same incidents, that it is going to be very terrible on the economic impact of this crisis will be terrible. So JP Morgan has now added its voice to these predictions, and it is expecting a 3% squeeze in third quarter of this year. In Namibia, which is under the southern part of Africa, there new vehicle sales growth was positive this time, 9.9% year-on-year as of June, more than 6% within the month only. And that represents some 843 new car sales in the month of June alone, despite the impacts of the COVID-19 and lockdown in that country. We understand that between Niger and Benin Republic, the construction work of the oil pipeline has now resumed, and it's 1,980 kilometers long oil pipeline. It is China that is constructing it. It is being constructed by the China National Petroleum Corporation, CNPC, and completion date is estimated at 2024. That will bring about 20,000 barrels per day of oil production from Niger to 120,000 barrels per day, from 20,000 barrels per day to 120,000 barrels per day when completed. And that would be between Niger and Benin Republic. The work has actually been put on hold as a result of coronavirus before now. IFC has just invested $1.2 million in Tanzania. It's a 5-year corporate bond. The company, the issuer was Tanzania Mortgage Refinance Company, TMRC, and it's basically to boost affordable housing in the country. And of course, the Ethio Telecom report released its earnings for the year ended July 2020-2021. And it was positive by 18.4%. That's in terms of revenue. The revenue growth was 18.4%, 56.5 billion birrs. Growth was actually attributed to some cost curtailing measures and ahead of the privatization plans and all of that. Customer base also grew. Internet data was also heavy in terms of growth. Then finally, in Rwanda, they are currently in a 10-day lockdown due to the resurgence of the COVID-19 cases in the country. So there will be the new lockdown took effect on the 17th of this month, and it is going to sunset by the 26th. That will be next week, Monday. About essential services like medical, groceries, and banking services are exempted from this current lockdown. And this is the much we can share with you this morning. Thank you for listening.
Thank you very much, Temple. We have now come to the question and answer portion of the meeting. If you would like to speak, you may raise your hand and we will ask you to unmute your mic and you may go ahead and ask your question. Or those of you who are joining us on Facebook or would like to use the Q&A chat box on Zoom, you may do that as well. I have a question for Omorige, and it is, what are your expectations for today's bond auction?
Okay, thank you, Chidozie, for that question. For today's auction, I expect the bond auction to be largely oversubscribed. Like we have seen in the previous trading session, despite the mammoth maturity of about 600 billion that came in on Thursday, we did not really see that buy side pressure in the market. So we have seen market trend up, basically, which goes against our expectation. But then we believe that a lot of players are just waiting on the sidelines and they are planning to go for this auction. So they are going to go for this auction heavy. And also given where secondary markets are currently trading at, for the 2050 maturity is currently trading at 13.15% levels, 13.25% levels. We believe that the auction will be largely oversubscribed. So our expectation basically for the 2028, we expect it to close between 12.3 to 12.6. For the 2036, we expect it to close between 12.95 to 13.2%. And for the 2050 maturity, we expect it to close between 13.1 and 13.5%.
Okay, thank you, Morgan. Do we have any further questions for any of the speakers today? Okay, I see that we have no further questions today. On behalf of Vetiva Capital Management and our media partners at Frontier Africa Report, we would like to thank you all for joining us today, and we continue to encourage everyone to keep safe. And we look forward to having you join us again tomorrow at 8:30. Good morning.